Hey guys, hey my good people, again it's about Frank. So it's another classic episode. So today I decided I wanna do this video. I wanna show you my simple strategy that I do use each and every day. It's on a Saturday, so I'm gonna show you the whole strategy. And then I'm gonna go through all the steps that I do trade each and every day. Then we can look for the potential trades that maybe will be available next week. Okay. Yeah, so without much further wasting of time, we jump into let me share my screen. Yeah. So without much further wasting of time, I come. So let me first of all show you my strategy. Then you can jump into. So my strategy is so simple. It's nothing complicated at all. Actually, it's a trading strategy. So this is a strategy that uses two time frames. In these two time frames, I actually use only one indicator, and the indicator is a 50 exponential moving average. So do you know the 50 exponential moving average? You come here to the indicators, and then you can come here and search here. It's on my favorite moving average exponential. You click on it, it appears here, and you come here to the settings, and then you can select then there's 50, 50 close. Uh, so yeah, and then you press that okay. But for me, I already have it, so I would be selecting it. Okay, yeah. So let's assume this is the 50 exponential moving average. Yeah, so let me first of all outline my all conditions, my entries. The conditions, I mean the things that must have been present for me to look for the entry reason, then the tops, then the targets. So first of all, my first condition that I look for, the first thing that is first rule that must be met for me to continue looking for an opportunity is I use two time frames, a higher time frame and a lower time frame. You can use a daily time frame and a 4 hour time frame. You can use a 4 hour time frame and a 1 hour time frame, 1 hour and 15 minutes and 5 minutes. Yeah, depending on the kind of trader you are. If you're a day trader, the perfect time to use is 4 hours in 1 hour. If you're a swing trader, maybe a day time frame and a 4 hour time frame. If you're a scalper, you can use a 15 minutes and 5 minutes or a 5 minutes and 1 minute. Yeah, so you can use any time frame. Provide the one that you're comfortable with. So let's assume this is the 50 exponential moving average. So I only have one condition that I look on the higher time frame. So let's assume that we're using maybe the 1 hour chart and the 15-minute chart. So the things that you're gonna look in the 1 hour chart is you must look for three consecutive crosses, three consecutive crosses which are above three consecutive crosses above 50 exponential moving average for you to look for long trades, for long opportunities. I mean, or for buy opportunities. You for you to look for buying opportunities, you look for three consecutive crosses which are above 50 exponential moving average. Yeah. So that's the first condition. If it's on a down trend, you look for three consecutive closes below 50 exponential moving average. But first of all, let's first look at the bearish example. So the first thing here, if it's on a if you're looking for long trades, you look for three consecutive closes above 50 exponential moving average. Then you get to lower time frame. That's for example, I said you use the 1 hour chart and the 15 minutes chart. So in the 1 hour, you're going to look for three consecutive closes above 50 exponential moving average. In the 15 minutes, now you're going to look for the market must be in a clear trend, forming clear higher highs and higher lows. Forming higher highs, clear higher highs and higher lows. Yeah, nothing like a confusion. In the 15 minute chart, the market should be forming something like this, a very clear one. Yeah, and these higher highs and higher lows, but in these higher highs and higher lows, they must all happen above the 50 exponential moving average in the 15-minute chart. So let me repeat. In the 1 hour chart, we look for the market must have three consecutive closes above the 50 exponential moving average. If that's met, then you go back down to the 15-minute chart. In the 15-minute chart, the market must be in a clear trend, forming higher highs and higher lows, clear higher highs and higher lows. Nothing like confusion. If you're not sure about it, you leave it. If it's something that is clear, then the second condition is met. Okay, so I think you understand that. I hope you understand that. Let's look for a bearish example. In a bearish example, uh, in the 1 hour chart, the market must have three consecutive closes below the 50 exponential moving average. Yeah, the market must have three closes below the 50 exponential moving average in the 1 hour chart. Then in the 15-minute chart, the market must have been forming, must be in a clear downtrend, forming lower lows and lower highs, lower lows and lower highs. Very clear one. If it doesn't happen that way, just leave them. Yeah, so those are the first two conditions, the first two rules that must have been met for me to continue looking for an opportunity. So anytime you look at the chart, you're using two types of time frame. In the higher time frame, the market must have formed the three consecutive closes above or below the exponential moving average. If it's above, you look for long trades. If it's below, you look for short trades. So I think that's understandable. So let's dive into our charts immediately. Okay, and then we're gonna see what to look. So this is GU. Uh, let's use the 1 hour, the 15 minutes chart. Obviously, let me I kind of deleted my indicator. So it's here with the exponential moving average. So you come up to settings, length must be 50. Yeah, 50 close, RGB is fine. Let me yes, okay. Yeah, here it is. So this is GBP/USD. So the first condition that I said we are looking for is the market must have three consecutive closes below or above the 50 exponential moving average. If you look clearly here, you can see that we have three consecutive closes above the 50 exponential moving average in the 1 hour chart. So the first condition is met. So after that, we jump into the 15-minute chart. In the 15-minute chart, we say the market must be in a clear uptrend and above 50 exponential moving average. So if you look here, we can't say the market is in a clear trend. The market is uh, the market is not in any trend. If you look here, the market is kind of raging. Yeah. So the first condition is not met in the GBP/USD. So let's jump into the UG. Mhm. In the UG, as you can see here, the market has three consecutive closes below the 50 exponential moving average. So we are looking for short trades. Then in the 15-minute chart, the market must be in a clear downtrend, forming lower lows and lower highs. Here, unfortunately, that's not the case. The market is in a raging market, so still in the UG, we don't have any opportunity. Let's jump into the Euro GPY. No, no, we need the one. In the Euro GPY, you can see we have three consecutive closes above the 50 exponential moving average in the 1 hour. So in the 15-minute chart, we need the market to be in a clear uptrend, forming lower lows and lower highs. Okay, so if you can look here, the market you can see mhm, it just reversed, forming lower lows, lower highs, lower lows, lower highs. Yeah. Mhm. I think the first two conditions here are met. But now, if those two conditions are met, there is a third condition that must be met. The market must pull back to the previous major of structure that must have been tested multiple times in the past. So the previous media level structure, it's this one. The previous higher high, it's the previous media level structure. Yeah, this is the this is the previous media level structure. And another condition that I forgot to include is that this media level structure must lie between 61.8% and the 30.8% of the Fibonacci retracement. For those of you who don't know the Fibonacci, here it is. It's among my favorite. Otherwise, you can trace it here. So let's look at the yeah. This middle level structure is lying between 61.8 and 38.3, as you can see here. Yeah. So it's just another confirmation. But now the market pulled back beyond this particular zone. So and again, that's another. It broke. I didn't follow all our conditions that was supposed to be met. So in the Euro GPY, it didn't follow our rules. Yeah, so here in this one, we go to the 1 hour chart. We have three crosses above the 50 exponential moving average. Sure. Mhm. Did the market form in a clear trend? I don't think so. The market is not in a clear trend. So we skip that. We skip that. Mhm. So coming in the 1 hour chart, the market has three consecutive closes above the 50 exponential moving average. Sure. Mhm. On the 15-minute chart right now. The market must be in a clear uptrend, forming higher highs and higher lows. Higher high, higher low, higher high, higher low, higher high, higher low. So I actually think this is a perfect opportunity. So the market must pull back in the previous major level of structure that lies between 38.2 and 61.8. That's this. Yeah, this major level of structure must lie between this particular zone. And as you can see, the market pulled back to exactly that particular zone. So in this particular point, you can see all our conditions are officially met. So the market is in a, when we go to the 1 hour chart, you can see that the market has been consecutive closes above the 50 exponential moving average. In the 15-minute chart, for those of you who can't see, we have a clear uptrend forming higher highs and higher lows. This is, I guess, quite clear. Then the market pulled back to previous major level of structure. We are lying between that 8.2 and 61.8. You can see the market pulled back to this particular zone. And again, the market is above the 50 exponential moving average. So now the last thing that I'm waiting for is for the market to form an entry reason. What's my entry reason? My entry reason is so simple. I'm waiting for a close above candle. So in this here in the 15-minute chart, if the market closes above this particular shooting star of the hammer, I mean, now I'm gonna execute it and then place my stop loss just few pips below the swing low and place my take profit two times the stop loss. Yeah, so that's my it's a very easy strategy. So on Monday, this is gonna be the first opportunity that I'll be looking for. Yeah, so mhm, Euro USD, let's look if there is an opportunity. The market has three consecutive closes above 50 function of the average in the 1 hour chart. Sure, that's pretty obvious. You can see. You don't need goggles to see that. So in the 15-minute chart, the market is in a clear trend and above 50 expansion moving average. So that's yeah, the market is in a clear trend because if you look from here, you can see higher high, higher high, higher low, higher high, higher low, higher high, higher low. higher high, and then the market is kind of forming the higher low. So let's put our Fibonacci. That's the Fibonacci. So here's the Fibonacci, and then the market must move back to this particular zone. Yeah, and then in this particular zone, I think I'm gonna be waiting for the same entry for a close above candle. So in the coming week, what I'm waiting for is the market to close above this particular point. If the market closes above that point, I'm gonna execute it, execute, and then close my stop loss few pips below the swing low, and then the take profit two times of the stop loss. So that's another opportunity. So the first opportunity is New Zealand USD. The second one is Euro USD. These are the pairs that I look for. And then the last one is the AUD USD. So this trade I had taken this trade and it got out of Sabina. So let's go about it. So there is three consecutive processes above the expansion moving average in the 1 hour chart. Sure. So in the 15 minutes chart, the market is in a clear trend, forming higher highs and higher lows. I think that's pretty obvious. You can see that. It's obvious. So uh, I come here and place my Fibonacci, and as you can the zone is this one. So the market pulled back to this particular zone. So what I'm waiting for is a close above this candle. Sure. So in the next week, if the market closes above this particular horizontal line that I just placed there, then I'm gonna execute, place my stop loss, keep it pips below the swing low, and take profit two times the stop loss. So that's my analysis. That's what I do each and every day. I look for tomorrow's opportunities. I prepare for them. I plan for them, so that when the following day comes, I don't give my emotions any chance. The only reason that will make me execute this particular trade is if and only the market closes above the that horizontal line. If it doesn't, there is no any negotiation. I don't place that trade. So I think even if you have a different strategy, I think that's something maybe you can learn and put in trading routine. You can be planning your trades on the previous day, on the previous week, depending on the kind of trader you are, so that when the opportunities present itself, you don't have emotions or there's the key to then what do I place my SR, what do I place my take profit. You don't give emotions at all for that because trading is more psychological than chatting or any other way. So without much further ado, let's call it a day. Yeah, so if you found this video to be good, you can subscribe, share, comment, yeah, and tell me what to do next on my next video. So that's it, guys.